Hello, class, and welcome to week 7 of BACC 531 Managerial Accounting. As we engage in this next to last week of the bi-term of our class together, you're going to be taking a look at several chapters and several different areas of managerial accounting consideration this week. Specifically, during our week 7 studies this week, we'll examine chapter 15 on the topic of target costing and cost analysis for pricing decisions, as well as chapter 16 on capital expenditure decisions and chapter 17 dealing with the allocation of support activity costs and joint costs within a variety of business environments. Specifically, as we get into these chapters and look at the concepts related to them, chapter 15 dealing with target costing and cost analysis for pricing decisions is going to take a deep dive into the relationship between the tracking of product and service costs and pricing decisions related to those costs. Cost is always a component of pricing. In some pricing strategies, a more direct component. In other pricing strategies, it's more of a background component. But in order to set an appropriate price for a product or service, the cost of providing that product or service is always going to be an important part of that process and an important consideration. The question is exactly how it's going to factor in, and specifically what the use of target costing and various approaches to cost analysis, what the use of those approaches and those analytical techniques can yield in terms of helpful information for product and service pricing decisions. In chapter 15, you'll take a look at how to list and examine 4 major influences on pricing decisions. You'll learn to explain and to use the economic profit maximizing pricing model. You'll also examine how to set prices using cost plus pricing formulas. You'll learn to analyze key principles that are involved in target costing and how target costing can be deployed in effective ways in a variety of business environments. You'll also examine the role of activity-based costing in setting a target cost, the relationship between product cost distortion, and specifically how product cost distortion can undermine a firm's pricing strategy, as well as strategies that can be used from a management perspective in order to avoid those challenges and the problems that come with that product cost distortion issue and with challenges related to that. As you move into chapter 16 on the topic of capital expenditure decisions, in this chapter we're going to look not just at the process for how businesses make long-term investments in property, plant, and equipment, but specifically some of the techniques and the analytical procedures within managerial accounting that can help inform that process for us. It can help us to make better long-term decisions about where we invest our capital resources. You'll learn to use different analytical techniques and ranking techniques to help decide which capital projects are most appropriate and best investments for your organization, including the net present value method as well as the internal rate of return method. Those 2 methods are not the only approaches to ranking capital investment decisions, but they are 2 particularly important and helpful approaches that are going to frame much of the examination in that chapter. In addition, in chapter 17, as you dive into the topic of allocation of support activity costs and joint costs, what we're looking at here are situations in which we have costs that are a necessary part of providing a product or service, but don't have a direct relationship to that product or that service being provided. In other words, they have to be allocated in some form. Support activity costs, as the name implies, are those activities of a business enterprise that support the overall process that's being carried out, whether it's a manufacturing process, a service-based process, or certain types of merchandising ventures. The fact of the matter is, all of the core processes that we engage in to generate profit in the context of business enterprises also require support activities that help those processes to be carried out. We know that, we understand that, but the question is how to effectively allocate those support activity costs to the various processes, the various product or service lines, and the costing approaches that we're using. In addition, we run into a complexity with joint costs, which are reminiscent of situations commonly in manufacturing where you have a certain volume of product that will eventually reach a split-off point where it can be formed into a variety of different products. For example, if you think about the natural resource of timber, of wood from a logging process, when you have timber that comes into a manufacturer of wood products, products, that timber is going to be processed in a variety of ways. Some of it may become lumber that you would go to Lowe's or to Home Depot to purchase for a home improvement or construction project. Other parts of it will generate byproducts or other products that can be split off. We have the log as the lumber starts, and then we have a variety of different products that can be processed from that log. That's not a hard concept. That's something that all of us are familiar with. But the question is when we have joint costs that are incurred in the processing of that product. For example, the initial costs of cutting the log, transporting the log, processing the log up to that split off point where the log can divide into different types of products. How do we allocate those joint costs that are incurred earlier in the process? More specifically, how do we do that accurately? How do we do that equitably? And how do we do that fairly? As you'll see in diving a little deeper into this chapter, failure to do those things, that is, failure to carry out the allocation of support activity costs or failure to properly allocate joint costs in a variety of business enterprises can lead to enormous problems, not only when it comes to accurate costing, but from that also accurate pricing and accurate decisions that flow out of those cost considerations on a variety of fronts. So all of that to say, these three chapters, though there's a lot of content, a lot to be examined here, these three chapters are going to continue to present you with information, with analytical techniques, and with strategies that will help to inform your decisions as a business professional, as a manager, as a leader on a variety of different fronts and in a variety of organizational contexts. As you take the information from these three chapters this week, you're going to apply that in the context of two assignments that will be required of you this week. The first is your week 7 reading assignment dealing with content from these three chapters. Again, chapter 15, target costing and cost analysis for pricing decisions, chapter 16 dealing with the capital expenditure decisions we just mentioned, and then also chapter 17 looking again at the allocation of support activity costs and joint costs. Your second assignment that will be due this week will be your week 7 problem set, taking the concepts from those chapters and applying that in the laboratory of your Connect exercises, your Connect problems that you'll work through this week. As always, if you have any questions about the content this week or any challenges as you navigate these assignments, please reach out and let me know. I'll be glad to help you as you navigate this content and glad to support you any way that I can. You can reach me once again at my email address, jake.brock@ucumberlands.edu. I'll be glad to hear from you and again, glad to help you. With that, thanks for watching. Have a fantastic day and have a fantastic week ahead.